The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
Let's talk about the Fed for a second. You think they should cut in June? Have they come around to your thinking, or has the stock market volatility or the economy? Do you think they've listened to you, or they've arrived at the decision themselves maybe to cut rates? And when do you think they should?
No, they haven't listened to me. And, we have people, it's more than just Jay Powell. We have people on the Fed that really weren't, they're not my people. But they certainly didn't listen to me because they made a big mistake. They raised interest rates far too fast.
Okay. Now, that is not true. Now, it depends on how you're looking at this. If you're looking at the health of the economy long term, so that your standard of living is going to go up at some point instead of be stagnant as it's been for 10 years, not true. You want rates going up. When rates go up, the dollar goes up. When the dollar goes up, you have better purchasing power. And the economy grows. That's how it works. This thing of cutting rates, we go back to cutting rates, that's quantitative easing. That's not good. See, when you cut rates, it's amazing. When they say, we may cut rates, the market rallies 500 points like it's a good thing. It's not a good thing. When you're cutting rates, you're admitting the economy is not growing. When you look at the bond rates and the yields, you look at the bond yields and they're down, that means there's a problem with the economy. It's not growing. That's what we're getting. But everybody has now been, their brains, the jibber jabbers, all these guys on Wall Street, the government is taking parking space in our heads that when the rates go down, that's a good thing, when it should be a red flag. Because what they're doing is they're printing money to push the rates down, so to avoid a recession, to avoid a crash, they're pushing rates down so they can continue to support these companies, the $9 trillion, our companies, our large companies, our corporations, to support the $9 trillion in debt. So they're forced, because the economy is not growing. And when the economy doesn't grow, jobs don't grow, wages don't grow, savings don't grow, and from savings comes everything. So what they're doing is they are pushing these rates back down, and they should be admitting we got to do this in order to make sure we don't have a crash, or at least we push the crash off. That's why we're doing it. We're pushing off the recession. And they should be honest and say, no, that's not a good thing. We should let the recession happen. Because if we let the recession happen, then we're going to clean up all this debt. You take our corporations with the $9 trillion, they're in deep trouble. $5 trillion, I say this all the time, $5 trillion is the largest corporate debt in history. And they got to hurry and push these rates down to make sure they survive. And the reason they're pushing these rates down to make sure they survive is so the banks don't get hit, because the banks lead the market. So this is not a good thing. It's not a good thing. It's only good for the very wealthy, who 85% of their income comes from the stock market. If you take the top 1 percentile, 85% of their income comes from stocks. And it's good for Wall Street, because when they push interest rates down, Wall Street can borrow money at very low rates that you and I can't. And here's why it's bad for the economy and bad for Main Street. When rates are pushed down, that sends a signal to smart money, to CEOs, there's no demand for their product. Anybody will tell you, look it up anywhere. When yields on the treasuries go down, that tells you the economy's not growing. So when they print money and they borrow it to corporations, they're not going to take it and push it into the company for CapEx spending. They're not going to take it and put new equipment, new technology to increase productivity so you get a pay raise. That's how you get a pay raise. You get a pay raise when the CEOs take their profits and plow it back into the company for CapEx spending. And then they go and borrow more money, match that money, and plow that into for new equipment, new technology, so that productivity increases. That means your wages go up. They're not doing that. If you sell lawnmowers and you see that sales in lawnmowers are down, would you go spend $1 million to increase productivity? Of course not. You take the $1 million and you buy your own shares back. And that's what's been going on for 10 years. How do you think we have gotten a 360% rally when the stock market at the same time can't grow any more than 2.8, 2.9%. How the hell can a stock be going up 357, 360%, but the economy's not growing? That's called QE. That's called QE. So now what's happening is everybody's getting fired up in the last few days, starting last Wednesday, because Mnuchin came out and said the bond market is telegraphing that a Fed rate cut is coming. Oh, that's great. Whoa, that's terrific. For who? The Fed rate cut means that the economy is not growing. That's why they're cutting rates. You don't cut rates when the economy is growing. When the economy is growing, interest rates go up. Your dollar goes up. A strong dollar means a strong economy. That's all good for everybody. But when rates are being cut, they're lying to you. They tell you, oh, this is great, we're cutting rates, so people are going to consume more. But wait a minute, what are they consuming with? More debt. That's why they had to cut rates, because people didn't have enough savings to consume. So instead of savings, they're using credit cards. That's how people are staying alive, with credit cards. For heaven's sakes, most people are making a family, okay, of, let's say, the two breadwinners. Between the two of them are bringing in about $58,000 a year. They really need, after they pay their taxes, they need almost $78,000 a year to really make it and put some money aside for retirement. So they're using 5, 6 credit cards to make up the difference. So let's think about this. So Mnuchin says the bond market is telegraphing a Fed rate cut, not a recession. Well, he's lying. The bond market is telegraphing the economy's getting weaker, not stronger. Now, let's think about this. Take some common sense. What causes rates to rise and the dollar? It's when the economy is doing well. That's because investors have confidence, so they shift out of the bond market where there's safety to buy stocks. As a result, there's less demand for bonds. Who wants bonds? When the economy's doing good, people jump into the stock market out of the bond market. So to attract bond buyers, what do? They raise rates. They don't cut them. They raise rates. And the dollar follows. So Powell, the jibber jabbers, are lying about how strong the economy is because they're doing the opposite. They're printing money to push rates down, which pushes the dollar down, which is a weak economy. But nobody gets that, because they keep taking parking space. Oh, this is good. Rates are going to go down. No, it's not. The reason the Fed, the reason why they are getting the printing press out is to print money because the economy's in trouble. We'll be right back with some stocks.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
If you're like me, you don't have time to trade in the stock market, so why not invest in the market? The MV2 stock chart and philsgang.com continue to make me profits in the market. You see, the MV2 is specifically made for those who do not have time to invest, but they have income to invest in the market, and I spent very little to begin my investment journey. It's the easiest stock chart to read, and that's why I spend little time invested in reading the chart. The MV2 simply tells me when to get into a stock and, most importantly, when to get out. I invest in a stock and I don't worry about the investment because I subscribe to the Phil's Gang alerts and they tell me when to take my profits. Yes, it's that easy. Go to philsgang.com or call them 877-600-GANG. That's 877-600-4264. Joining Phil's Gang was the best financial decision I have ever made.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
Hi, I'm Phil Grandy. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation. 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigativeGroup.com.
License number A1900020.
Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Phil's Gang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Phil's Gang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Phil's Gang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Thinking about investing in the stock market? Go to philsgang.com, where we have over 50 years experience in trading and investing in the stock market. Phil's Gang teaches you how to make profits in the market with stock chart analysis, up-to-the-minute alerts, and always keeping you informed with professional guidance in long and short-term positions. Go to philsgang.com or call one of our professional staff to answer your questions. 877-600-GANG. That's 877-600-4264. Stop wondering about your financial future and start doing something about it.
Welcome back. Are you a fan of the Phil's Gang radio show? Then you should check out philsgang.com or give them a call at 877-600-4264. Now, here's Phil.
Stock Corner is brought to you by CashCallMortgage.com.
And welcome to Stock Corner. Okay, this is the time that we go over our portfolio and identify for you how well our members are doing. Remember, it makes no difference to my members whether the economy's strong or the economy's weak. Now, I'm talking about, of course it does, but I'm talking about as far as the revenues they're making on their stocks. Because with the same ease they buy stocks, they also sell stocks short. And that's the key. You can't do that with mutual funds. When you get hit, you have a 10% correction, and the market goes down, you're caught. You go down 10%. You think, well, all I got to do is get 10% back, I break even. No, you got to get almost 20% back to break even. People don't realize that. And that's why we have the finest teaching online facility, I think, in the country. If somebody wants to really learn how to be an investor and be on their own, that's a great way of doing it. We have a terrific training program. If you want just to follow our portfolio, when I say our, I mean the members' portfolio, and just at 2 o'clock every afternoon we post the videos which give you the instructions what to do. And it's very, very easy. You just go to our site where it says Working Investor, and then you pull the tab down, and it's where it says Class and Updates, and it says Working Investors. And then you click on, and then you have the video of each of our stocks telling you exactly what to do. You don't have to go to class, you don't have to do anything. So that's up to you. That's your choice. And right now I'm going to call on Tommy, my producer, to go ahead, Tommy. Why don't you give some of the reports?
Well, Phil, again, that's the beauty of the MV2 that you always talk about. We stick with 5 stocks over, 2.5, 3 years now. And I just want to point out a couple of them, like Goldman Sachs. Goldman Sachs, we got short on May 10th at about $202, and then we got out when it turned red, out just this past Thursday or Friday, and we took a 10% profit going short on Goldman Sachs. A couple more I want to point out is at Intel, INTC. We were short in Intel. We got in on April 25th at 58.38, and again on this past Thursday or Friday, we call it Profit Taken Friday, we got out at about 44.23, and yes, a beautiful 26% profit going short. So again, the beauty of the MV2 stock chart is we turned around today and we went long with Intel. Okay, so we had an advanced order, what we call an advanced order, when we got in at $46. We're already up 2% on Intel. And then finally, Big Tech, XLK, your ETF. We were short the ETF on XLK. Around May 15th, we got in. We got out at 70.15, took a 7% profit. And here we are today. XLK, we've gone long today, and we got in at about 77.45. So there's a great stock as XLK is going up. Great stock to follow you with.
Okay. All right, Tommy. Thank you. All right. Now, the point is that if you're going to make money in the stock market, the people make the mistake of trying to find that hot stock. They listen to Fox, they listen to CNBC, the hot stock, they jump all over the place, thinking they're going to get that score. That's not how you make money. Professionals don't do that. So you want to take 6 individual stocks, put it as your portfolio, and you can stay in it for as many years as you want, as long as they're name brand stocks. Now, why? Because they're brand stocks, the institution money, the big hedge funds, the big insurance companies, the big corporations, Wall Street, they buy those stocks. I mean, Intel, Goldman Sachs, AT&T, Caterpillar, Schlumberger. There's 6 of our stocks. Why would you have to get out of those? And when the market goes down, you don't hurry up. I got to get out. Let me get out. And then let me go find another stock to go up. That's how it works. When it's going down, the market starts to crack and starts going down. You just shift to a short position. As I say, you can either, if you want to be an activist investor, you come to our program, and we have the best training facility online. And we're there we train you from 9:30 in the morning to 11, updates all day long. But if you don't have time for that, or you do and you just don't want to learn, then why don't you just follow our 6 stocks, or just go to Working Investors, and they're right there. Just go in and you'll see everyone has a video. You can't, if you follow the video, how are you going to lose money? Okay, but the key is shorting, and also ETFs are very important, like the spiders. SPY, IWM, small mid-cap stocks, the semiconductors. I told my members, I said, when these were getting hit hard, we were short, and I think we had a return in that ETF, the basket of semis, about a 13% return. Now we turned around and said, okay, now let's get ready. We'll be the first ones to go along, just like we did with gold. Gold, we did fantastic. We're the first ones into gold. So join the gang. Go to my site, philsgang.com, join, try it for 30 days. And if you're making money, just remember St. Jude. We're reaching out to you. We're going to help you. You turn around and help St. Jude. So, again, 877-600-GANG, or just go to our site and you can sign up right there. Either way. All right. I want to get back to what's going on here. Listen to this.
The bottom line, though, is that we should still get a 3% year as long as job creation and wage growth continue where they've been.
It's not going to happen. The reason they haven't grown to 3% in 10 years is because, again, there's too much debt, way too much debt. And when you don't clean up those bad companies and that debt, and if you just keep them on life support, example, we've never had corporate debt like this, $9 trillion, of which $5 trillion is really bad debt. You can't grow. You got to get rid of that debt, the bad debt, shift it to the better companies, shift it to upstarts. Well, how do you do it? Well, I hate to tell you, it's called recession. But no president wants to go into a recession, especially when they're close to an election. So what happens? They keep funding the bad corporation by lowering rates. And what does that mean? You're not going to get a wage increase. That's what it means. We'll be right back with a lot more. Join my gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
We're speaking with Jared Douglas. He's a licensed mortgage loan originator, and his company's called Cash Call Mortgage. Let me give you his number, 949-535-9385, or you can go to cashcallmortgage.com. Jared, I want to thank you. The service you gave us was incredible. Why don't you explain a little bit when you say how you specialize in alternative products for self-employed applicants?
Yes, thank you, Phil. Thanks for having me on. So what we specialize in is an alternative product for applicants who are self-employed. We have a product for applicants that are, have a lot of assets but no documentable income, and then we have another version for, real estate investors. So there's 3 versions of our alternative approach or alternative product that helps people with, outside the box scenarios get financing.
Again, let me give you his number, 949-535-9385, 949-535-9385, or you can go to cashcallmortgage.com.
PhilsGang.com is not the only way you can stay in touch with what we do throughout the day. With today's social media, you can stay up to date with Phil's Gang current events. You can find Phil's Gang on Facebook, Instagram, Twitter, YouTube, and more. Phil's Gang Radio Show is broadcast live Monday through Friday from 3 p.m. to 4 p.m. Eastern Standard Time on Facebook, Periscope, and, of course, YouTube. Don't forget to hit that like button and subscribe. Go to philsgang.com and find our social media buttons at the top left-hand corner of the site. philsgang.com and Phil's Gang Social Media, keeping you connected.
I tell you every time I'm on the air, look, join my gang. Try it. Try it for 30 days. $39.95. Now, these are our 5 individual stocks. We've been in for, more than 2 years. AT&T. We got a 3% profit so far in May. Our Goldman Sachs are up 6%. Our Intel, we have a profit of 16% shorting it. But you in a 401k, you can't short, so you lost 16%. Caterpillar, we're up 11% shorting it. And Schlumberger, we're up 18% because we shorted it. That's how you make money in this game. And we stay with those same stocks all year long. That's how you make money. You become one of them. Any dope can make money on the way up. It's knowing when to take your profits, knowing when the signal is telling you time to turn mother's picture to the wall and run like hell.
For more information, go to philsgang.com or give us a call at 877-600-4264. That's 877-600-4264. I pay thousands of dollars for a weekend seminar when for only $39.95 a month. philsgang.com provides all the daily market investing information you need to make profits in the stock market. With over 40 years of investing experience, only Phil Grandy and the philsgang.com team provide daily live investing webinars, up-to-the-minute market updates, all the investing educational videos you can imagine. Don't hesitate to learn, invest, and make profits. Go to philsgang.com or call 877-600-GANG, 877-600-4264.
Hi, I'm Phil Grandy, philsgang.com. If you want the truth, then tune in my show every weekday at 3 p.m. Eastern Time, or you can listen to this fantasy.
Wow, low unemployment, high jobs, high wages, big consumer confidence, major productivity, and no inflation.
No inflation? What are you, nuts? Stocks up 357%. Gasoline's up 46% alone since December. How about medical? Up 8%. College up 8%. Movie tickets with soda, popcorn, up 15%. Low unemployment? Not true. The 3.9% is fake. It's really 11% because of the 15 million discouraged workers they do not add in. Look, this is just some of it. High wages? That's a joke. It's 1.2%, not 3%. When you look at the withholding tax where the truth is. Join my gang, philsgang.com, and get the truth.
For more information, go to philsgang.com or give us a call at 877-600-GANG, 877-600-4264, 877-600-4264. Welcome back. Are you a fan of the Phil's Gang radio show? Then you should check out philsgang.com or give them a call at 877-600-4264. Now, here's Phil.
It's real consumer spending that is kicked up a notch or two, and that is really supporting the economic growth going forward.
First of all, that's not true. The economic growth has been going nowhere. Think about it. For 10 years, we have not hit 4%, 5%, not even 3% consistently, not even 1 year, 3% annualized GDP growth. Because you can't grow an economy when you have too much debt. And the debt comes from these terrible stock buybacks that drive the market up. We've never had corporations be in debt $9 trillion. When they're in debt that much, which $5 trillion is really worrying them right now. That's why, the market went up to 500 points the other day, Tuesday, and then today it's been up almost 900 points in the last few days. And people are taking it, oh boy, this market's up, everything's okay. Here, listen.
And you know what? Everything's okay. The market has come back.
Come back from where? We haven't even had a recovery yet from 2008, 2009. Where's the recovery? Market's been propped up with QE and stock buybacks. That's it. They keep saying we have the strongest economy ever. We have the best wages ever. No, we don't. If we did, we'd be growing to 4 to 5%. I mean, it's just amazing how they lie. the fastest economic growth in history. Wrong. It's not happening. 40s, 60s, and 1990, much faster. Best wages ever. Not true. Wages are no better now than 1973. Matter of fact, if you look at the wages, we came out last week, in 2018, we have wages on an annual basis higher than in 2019. We went from 3.4% in 2018 to 2019, 3.1%. Also, jobs. They lie to us about jobs all the time. They tell us how strong jobs are, right? Unbelievable.
7.449 million job openings in April. This is for April.
But it's a reading of economic strength.
Oh, God, yes.
If you've got 7.4 million jobs available, that's a very large number.
No, those jobs available are high-tech jobs. And what's happening is the reason why they're available, they can't get them filled. Why? Nobody wants to train them. It's cheaper to send them overseas. That's what's going on. They make it sound like they're going to open up the door and all these people are going to rush in to take these jobs. No, they can't fill the job because we're not training the people. Corporations used to take you in and train you. No more. They can outsource you. That's a bold-faced lie. It's just a lie. I mean, it's amazing. And again, when you look at the economy, and just think about it for a moment. Our budget deficit, meaning we spend more than we take in. We are spending 40% more than we take in. Our economy, our debt is growing 35%. Debt 35% faster than the tax income than our income. Think about that. Our debt is growing faster than the income we bring in. Now let's talk about consumers. The consumer, he says the consumers are spending and driving the economy. No, they're not. You got to think about that for a minute. If there's savings, we had a lot of savings. And where do savings come from? Good jobs. When you have good jobs, you save. And from savings, what happens? Banks, right, will offer even higher savings to bring even more savings in so they can loan to businesses, small businesses and small startups, which is the backbone to our economy. But rates are going where? Up, not down. What's the dollar doing? Going up, not down. So when you have a good economy, you have good savings. And from that savings, people consume. You have a strong dollar, strong economy. But when you have a terrible economy, like we do now, can't even get to 3%, what happens? That's when they lower rates. Because if you have no savings and you can't buy something, right? You have no savings, you can't buy anything. You work paycheck to paycheck. Now you want to buy that motorcycle. What do? You go finance it. You didn't buy a motorcycle. You bought debt. Now you see a boat. You want the boat. You don't have any money in savings. So what do? You go borrow. You have more debt. So that's how they call that the economy is growing. When they should be saying, no, the economy is not growing. Our debt is growing. At some point, you got to pay the debt back. And that's how stock markets implode. Because at some point, people are spending so much, have so much debt, they can't cover it. And then all of a sudden, bang, what happens? That inflation of everybody buying, they stop buying. They stop. And that's how crashes start. They stop buying because they're just tapped out. Their credit cards are tapped out. Their credit scores are tapped out. Their credit scores are bad. So now what happens is prices start to deflate. So the motorcycle you bought for $1,200 is now $800 because the store is trying to create more business, right? So what happens is the prices go down. Now all of a sudden the store starts laying people off. And then when you see your neighbor not going to work and he got laid off, he tells you he got laid off, you panic. What do? You stop spending. And when you stop spending, the economy doesn't go. And all of a sudden you're in a crash. All this nonsense. Oh, we just dropped rates. Everything's okay again. I mean, for someone to say this stupid thing right here, this remark is unbelievable.
And you know what? Everything's okay. The market has come back.
Oh, everything's okay. Everything's coming back. It's unbelievable. Then this guy.
Whatever we were worried about, we're not worried about anymore.
No, don't worry about that, he says. Don't worry about that. So, okay. So we have historic revolving debt of $4 trillion. What's that mean? Never before have we had so much credit card debt, auto loan debt, student loan debt. That has nothing to do with housing. Now go to housing. We've never had $16 trillion in household debt. Never. Credit card interest, the fees paid in 2018 alone are up $104 billion. That's up 35% in 5 years because the banksters keep moving up the interest rate on you. They keep moving the interest rate up on you. Student loans, $1.5 trillion. Are you nuts? That's $671 billion increase, higher than 2008. Does this sound like a great rip-roaring economy? 6.3 million Americans are 90 days late on their auto loan payments. Let's take entitlements. $769 billion. Okay, entitlements. That's a 21% of our. You take our federal budget, our whole budget. Our entitlements are 21% of that federal. We can't keep doing that. Social Security, $860 billion. Medicare, $524 billion. Medicaid, $304. We don't have enough money to pay for this. But people say the economy's doing great. Why? Because the banksters who own us, our owners, they'll just keep giving you more credit. And they get rich again. When the bubble pops, goes back down, then they start again. Because you have no cash, they'll drop the interest rate back down and start building a bubble, and they tell you it's a great economy. No, a great economy is when there's good savings and you buy from savings, not buy from debt. Corporate debt has increased 40%. 40%. Because why? Corporations, all they're doing is getting all this cheap money, and they're doing stock buybacks. But that's not helping Main Street. The stock market goes up, and that's where we come in, and we're making money in the stock market, but it doesn't help Main Street. They don't get anything out of it. They don't get a wage increase. Join my gang. Be in the right stocks at the right time.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
Does your money manager send you an alert when the stock position that you're in goes up or it goes down? Does your brokerage send you an alert to get out of a stock position so you don't lose money? Of course they don't. Here at philsgang.com, we keep all of our members engaged with the stock positions that we recommend. Nobody does that for their clients. Nobody. Go to philsgang.com and become a member to get up-to-the-minute alerts. That's philsgang.com. Stop losing money and start making money with Phil's Gang.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Tell you every time I'm on the air, join my gang. Try it. Try it for 30 days. AT&T, we got a 3% profit so far in May. Our Goldman Sachs are up 6%. Our Intel, we have a profit of 16% shorting it. Caterpillar, we're up 11% shorting it. And Schlumberger, we're up 18% because we shorted it. That's how you make money in this game.
For more information, go to philsgang.com or give us a call at 877-600-4264. That's 877-600-4264. Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Philsgang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Philsgang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Philsgang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts.
Hi, I'm Phil Grandy. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation. 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigateGroup.com.
License number A1900020.
Welcome back to the Philsgang Show. Are you ready to make profits in the stock market? Then go to philsgang.com or give us a call at 877-600-GANG. Now, here's Phil.
Hi, I'm Phil Grandy at Phil's Gang. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation at 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigateGroup.com.
I've been a Philsgang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Philsgang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
Okay, and welcome back to Phil's Gang. You know, I can sit here every day and give you stats, but nobody's going to really care. I can tell you, for example, new homes has dropped to an 8-month low, new home sales. Existing home sales has fallen now for 3 months in a row. Pending home sales have fallen for 6 months in a row. Credit card delinquencies, charge-offs soared to a 7-year high. Decline in freight orders, not seen this low in 4 years. Heavy truck production, those are the trucks that move stuff back and forth from coast to coast, down 66%. But that's not going to hit anybody. Anybody's in a 401k, they don't care about any of that. They think, well, it's okay. I don't know anything about this stuff. I'll just stay with my 401k. I'm okay. I'm cool. But then think about it for a moment. The first thing they hear when they hear this, though, they get fired up.
The economy is still on fire.
Yeah, they get all fired up, right? All fired up. It's amazing. And then you hear stuff like this here.
And we think that the labor market is showing healthy growth, actually, and that the economy is still positive. That's not saying that there are risks in the economy. We think that the economy is growing at a pace that can support the stock market.
No, it's not. What's supporting the stock market? They're lying to you. What's supporting the stock market is stock buybacks. That's all. Print money, and then all that money that's in your wallet when you go shopping is worth a lot less, and then you can't buy as much. But nobody cares. I can say this all day long. Nobody cares. So she can come on and they'll believe her in a split second because she's on TV. Oh, things are great. Why do you think people are saying, I don't feel it. I just don't feel it. Well, of course you don't feel it because you're being duped. The whole stock market is what? Is stock buybacks. And when the stock goes up, they say, oh, that's great. Look at the economy must be good. No, the stock market is not the economy. It's not. But you're not going to believe that. And the reason why you're not feeling it because you're being duped. Because, see, Main Street is screwed out of real income growth because CEOs are using the money that was earmarked. So when they push rates down and CEOs can borrow money near 0 or 2.5%, they don't borrow it and buy new equipment to increase productivity so your wages go up. What do they do with that money? They take that money and they put it in their pocket. They buy stocks back of their own company. Their income is tied to how high stocks go. And when those stocks go up, they make a fortune. But you are working, you're in Main Street, you're not getting a penny more. You get screwed out of real income growth because CEOs are using that money not for capital investment. Why would they? Because when the economy is stuck at 3% for 10 years, we should be at 4 to 5% at least. But we're not. So when the economy's not growing, why would a CEO take that $1 million that he can get for near 0 rates or 2% or 1%? Why the hell would he take that money and buy a new piece of machinery? He's going to take the money and buy stocks, his own company stocks, and that stock rallies. And you want to be a gang member so we catch those stocks when they rally. You want to be a gang member when those stocks go back down with the same ease as they go up. Look, Intel, for heaven's sakes, it went down 26% and we sold it short. Goldman Sachs went down 10%. We were selling it short. Caterpillar, 12% return. We sold it short. Schlumberger, 20% return. We sold it short. Now imagine if we didn't sell it short. We would have made no money those months. But you have to sell it short. But see, people will hear on TV how great the economy's doing. Here's what they'll hear, right? I drive you crazy with it.
The economy is still on fire.
Still on fire. So people, oh, I'm okay. I must be okay. But I'm not feeling it. How are you going to feel it? Because nothing happened for you. Main Street, your standard of living is not going up. You're going deeper and deeper in debt with more and more credit cards because your wages aren't going up. You're buying stuff not from savings because your wages went up because your CEO increased the productivity by taking that money that he could buy it, get real cheap and buy new equipment. He's not doing that. He's buying his own stock. But because you think you got a credit card and you can go out and spend on a credit card, you think, oh, I'm okay. I get a kick out of it. They say, confidence is up. Consumer confidence is up. It's up because they can get a credit card. It's unbelievable. So Main Street, you're living a standard. Your living standard has gone down. You've gone into debt. More credit cards. More, and you stretch your car payment out. Instead of 3 years, you want it for 7 years. Your loan balances now are exceeding the value of your car. Many households are living on credit cards. They're paying the minimum amount. But this is what the owners are doing. This is what they want you to do. This is what they want you to do. So we get this announcement by Powell and by Mooch, oh, the Federal Reserve is going to lower interest rates. Hey, market goes up. Now, we're going to make sure we're long the market. We're going to catch that for you. If you're a gangman, you're going to catch it. But how long do you think it's going to go up for? It's not. It can't sustain itself. It'll go back down. And that's why you got to learn how to be in a market so it doesn't make any difference if it's up or down. And that's what we do. That's what we do every day with our members. So the announcement by Powell, now Mnuchin, the Federal Reserve, is lowering interest rates. Everybody's excited, but they don't understand that what they're saying to you, you're screwed. The top 1%, who 85% of their wealth come from the stock, they're going to do just fantastic. Or if you're with Phil's gang, you're going to do fantastic. But if you're doing nothing, you're just sitting there, or you're in a 401k, you're screwed. It's over for you. Your wages won't increase because they're doing it on purpose. They're pushing rates down. And when you push rates down, your wages can't go up. Push rates down, the dollar goes down. And who uses that money? The CEOs to buy their own shares back. Don't you get it? So we've been lied to. And all you can really do is think about this. They say things are great, but wait a minute. We have big 4 red flags. We have negative housing starts, negative home sales, negative durable goods orders, and we have inverted yield curves. You now can go and invest in a 3-month treasury and get more money than you can in a 10-year. That means the economy sucks. Think about this. Between Aunt B and Powell, when they raised rates 2.5%, that's too much weight on this economy. They got to lower rates. Can you imagine? A 2.5% interest rate is too much weight on the debt that we have, that we're carrying. Not only the corporate debt, but the household debt, the credit card debt, the auto debt. 2.5% is too much. Too much pressure. And these corporations now, that has $9 trillion in debt because they borrowed all this money to buy their own stock, now they're in deep trouble. So what do? Don't panic. Let's just position ourselves. When the market goes down, we'll be making money with the same ease as it goes up. So join my gang, 877-600-GANG, or go to philsgang.com. And if you want to participate, it's the same $39.95, covers all. If you want to participate, you want to be an activist investor, learn how to invest, then just come to our classroom online. Otherwise, just go to Working Investors and just follow the video that tells you exactly what to do with our portfolio. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to